My guest, Simon Hayes, he's from Odgers Berndtson. You've got a lot of expertise in dealing with top executives, I mean, in recruitment, etc., in Asia as well as Europe. Now, what does this report bring to the table?
I think it focuses on clarity and on making sure that remuneration is linked to long-term performance in a way which is correct for shareholders.
Now, you don't think the time requirements here would be very helpful?
I think transparency is the key, and I think, frankly, the global markets have realised that you have to have a longer-term perspective in dealing with remuneration, and therefore it's not going to be a huge surprise to people. I mean, obviously, some people wish that it was the good old days of having bonuses paid 100% in cash immediately, but clearly that's not a sustainable model. And
I think a lot of banks were anyway going towards and would actually issuing shares rather than giving cash bonuses. It was a mix of the two. And
let's not forget that. I mean, this isn't sort of a radical change in behaviour. I mean, using equity sort of shares as part of the remuneration pot has been in place for a long, long time. And the global investment banks, for the most part, have had very consistent sort of approaches to paying their people for quite a long time.
So is it, in a sense, also a tad cosmetic?
I think it probably is, to be honest.
Yeah,
I mean, there's a wonderful comment in the report about sort of howls of anguish from the city. I don't think you're really going to see howls of anguish in terms of the approach to remuneration per se, because I think sort of best practice in the city and with global firms is already well established. I think the one danger in terms of the howls of anguish is obviously you don't want to penalise London as a financial centre, and you don't want to put London out on a limb compared to what's happening in other global markets.
I'll come to that in a second, the point you raised there, but what about this notion again of being seen to do something?
Obviously, in the current environment when pay is on the front page and on the 10 o'clock news every day, you have to be seen to be doing something. But frankly, the banks are, for the most part, already addressing these issues very, very clearly. They know, and it's the right thing to do, that you have to link pay to long-term performance and to transparency in terms of risk. OK, let's talk about the idea of the city and, of course, its status as one of the world's leading financial centres. Is there anything in this report which would actually involve people leaving as a consequence? I think if you have the UK acting in isolation and introducing much tougher rules in terms of disclosure of pay and how people are remunerated, which I don't think we're going to get to, then you would have that risk. But, I mean, are we really going to have a situation where the UK acts in isolation compared to the G20? I don't think so. And so I think over the coming months we're going to see a much more globally focused approach to this. And the fact that the UK is leading the way with the report has to be a good thing. Board evaluation, what do you make of that aspect of it? I think the key thing is it's not how many directors you have, it's how good are the directors. It's not how much time they spend, it's how competent are they well supported. Anything that you can do in terms of board evaluation has to be good. I mean, isn't that the case for most of these companies as well? When you have, let's say, chairmen of boards who've never worked in a particular industry. I mean, I would take the former chairman of Royal Bank of Scotland, Mr. Killett. He was at AstraZeneca. What does that have to do with RBS? I think that's absolutely the key point. You have to have competent directors who know exactly what is being talked about. I mean, structured derivatives are very complex products. You have to have people that understand that. And I think just as importantly, you have to have an office of the board, or you have to have support mechanisms for the directors, which give them training and which give them the appropriate skills to ask the right questions. Pay limitation as well, and also the disclosure of actually how much everybody earns in a bank anyway. I mean, the tax authorities already know that. Well, they know that. And also, clearly, you can't have a situation where people are being named and shamed. You don't do that anywhere else. I mean, are footballers individually named and shamed? No. Only when they do certain things. Only when they do certain nightclubs, yeah. So clearly, it's not inappropriate to have banding. It's not inappropriate to give an idea of how remuneration in those bands is applied to risk. But clearly, that's the key issue. OK, so overall, your verdict, is this the toughest set of guidelines on earth? We're probably at the moment sort of showing the most will to be tough. Are we going to end up having the toughest regulations on earth? No. Is it a good balance where no one's particularly happy but no one's particularly unhappy? Yes, I think it probably is a good balance. Simon, thank you very much indeed for coming in. Simon Hayes there joining us. He's from Odgers Berndtson, just going through that walk of